closer, because human interaction will be improved if you come closer. We need to group up. It goes back to Stone Age. You know, we have to sit close to the fire here. The fire is the deregulation. Thibault, come over here. We need you as well. We need you to come closer, okay? And I want you to interrupt after each sort of speaker and presentation and ask questions. Half of the human population is too shy to ask questions. That's why I go around and ask people, you want to say something? What do you expect from this session today?
Well, I probably will come back with my questions
after the session. So that's a good example. Now, let me start the following then, is to say that my qualifications are very low for this moderation role. I know less than everyone on the panel about this. But I have done a couple of regulatory things in my life, and you can look it up on LinkedIn. I'd like to start to have the people on the panel presenting themselves. And we start with the non-lawyers. Who is not a lawyer? Good. So we start with the non-lawyers, and we end with John Lore from Market Capital Fund. Short presentation, who you are, and what you will talk about. In terms of topic of self-regulation.
All right, my name is Michael Golomb.
You need the mic.
Hello. My name is Michael Golomb. I'm taking 2 companies public, one in New York, one in London. Several different ideas. I'm also one of the founders of V3. I was the first employee, CFO, and board member of V3. Right now I'm a CEO of a public traded company on NASDAQ. And what else? And I'm also founder of ICO Governance Foundation with Miko.
Everyone knows what BitFurry is in here?
Yes, we are.
Great. Excellent.
My name is Krzysztof Piech. I came from Warsaw. I would like to talk about examples of self-regulations that we did in Poland and what is the current situation in that aspect. I run the Blockchain Technology Accelerator there in Warsaw and the Blockchain Technology Center at the university.
Hi, good morning. My name is Csaba Horvath. I'm based in Singapore. I'm from a managing partner of Fusion Capital Partners, as well as helping out with a project called Mythcal.io, which is looking into compliance and governance in the blockchain space, and particularly in securities assets. So what I did prepare for today, actually, I brought some examples and potential benchmarks as food for thought from other industries, because self-regulation is not only in blockchain. It was a question in other industries before.
My name is Reginald Ringgold. I'm here on behalf of LDJ Capital and the Soho Loft Media Group. I'm the founder of Blockvest Decentralized Exchange, Blockchain Investment Group, as well as the Blockchain Exchange Commission, founding member of Blockchain Exchange Commission, along with David Drake. It is a regulatory oversight a foundation that looks to clean up the industry and create a culture of compliance within the industry. I'm here to talk about some of the recent changes in the regulatory climate as it pertains to digital assets and digital securities.
Great. I'm John Lore with Capital Fund Law, based in New York. We represent cryptocurrency hedge fund managers and venture capital managers. So our focus is global. We have just over 30 cryptocurrency funds spread across the US, Asia, Europe, and the Middle East.
That's wonderful. So we have a great spectrum of people, and what I would like to do is just to set the stage with 2 slides, which I promised to do after talking to John. So we're not just going to focus on ICOs, which is one aspect of the business. We also have the serious people here on the panel representing hedge funds and investment funds, funds of funds. So there is no next one, please. The manual sort of traffic police. Hey, I live in Luxembourg. Is there anyone else from Luxembourg here? Okay, so then I can say whatever. But the point is that there are, you know, 5,000 family offices, 5 trillion under management out of the 130 managed globally. They're very proud of that in Luxembourg, and they managed to create a financial center. It's like 3rd biggest banking center in Europe and the 2nd asset management. So there are tons of 30,000 people are working there in the financial sector. Many of them are driving every day back and forth. Now, there is a recent very interesting thing related to our topic here. This is a poll from PwC that came out 2 weeks ago. What does banks and financial institutions and all these professional investors think about the future of banking and finance? Yeah. After this slide, I'm going to give you my one-pager, and then we can have a seminar on that, but I'll give you some background on that. So what is their concern? Well, in effect, as you can see here, the main concern is over-regulation. They're not afraid of competition, new market entrants. They're afraid of over-regulation and cyber threats. So on that backdrop, I think that is an undercurrent for our talk today. We're going to talk about best practices of regulation and current situation in the dynamic landscape. But remember, people are afraid of over-regulation, and we have a lot of it in Europe, don't we, Thibault? More is coming in the pipeline. Next slide, please. Like that is, okay, next one, sorry about that. So I put together a little map, which is a wonderful little provocative map showing the dynamic landscape. John asked me to put it up. It's not carved in stone, but you can see there are a lot of leaders here. So everyone is following the SEC at the moment. What is SEC, pulling out of their butt, as Willie Robbins-Williams would have said. And then you have London, you have all these different countries. Anyone knows those flags? Been to Malta or Gibraltar? So they're moving up and down, and you have a lot of laggards here that are moving. I put Luxembourg actually at the bottom because they are not very innovative. Huh? And I think that these are showing that, in effect, those countries that are at the forefront will be the ones who will be the winners in this future crypto blockchain space, because there's a lot of inward investments, a lot of capital, as you know, that's been raised in 2017, more to come. This is something, by the way, I shared with David Drake in Brussels. I invited him to the Swedish Investor Club last week. We had great fun. No, he's in Antwerpen, I think, today. Yeah. So that is, now I would like to invite to the floor to do the formal presentation. Any comments on that, by the way? Interrupt me, please. Thibault, you are the master of, okay, so he doesn't want to. You have any comments on how do you see regulation worldwide? What is your concern? Bermuda, yeah, that's a good one. I think you guys know about Bermuda. Who wants to start a presentation? Krzysztof, you're the academician. Go ahead.
Okay. If I may ask for the presentation to show the first slide. My specialization as a researcher was the state policy, government policy, especially in the fields of innovation and financial crisis. 20 years ago, I started studying internet policy, so I remember quite exactly what was the situation there, how the US government reacted to the development of internet, what were the discussions about the regulations at that time. You might not remember that things, but for me, as a researcher, I can still remember that. And from that perspective, I'm trying to bring this kind of experiences to my country where I live, and we started self-regulations as early as in 1914. So at that time, we have identified about 15 projects of creation of cryptocurrency exchanges in Poland. 15 of them were being created in Poland. One of them is now the second largest Bitcoin exchange in Europe. It's called BitBay. We are quite strong at the very beginning in cryptocurrency field. So if my colleague is from Bitfury, my business partner was the first investor who invested first $100,000 in Bitfury, and that was the beginning of the situation in Poland. We established Polish Bitcoin Association, and we created the minimum security standards for Polish cryptocurrency exchanges. Then we consulted it with the Ministry of Finance. We received some very negative response from the central bank, but we. Why central bank still doesn't like cryptocurrencies in Poland? We are working on that, but it's a very difficult job. I'll tell you a bit more during the next slide, if I may ask for the next slide. It would be faster if I click it. Yes. Then 2 years ago, the new Minister for Digital Affairs has established the advisory group within the government program called From Paper to Digital Poland. The group was named Blockchain, DLT, and Digital Currencies. Originally, it was blockchain and cryptocurrencies. I was in charge of this group. We gathered over 50 persons from startups, big corporations like IBM, MasterCard, from public administration, scientists, lawyers, and so on. So we started very early at the next stage of self-regulations for the Polish cryptocurrency markets, but also we are trying to identify what can be the obstacles for the development of blockchain applications in business administration. Please. So we did this kind of analysis, and one of the results was something what we call the canon of good practices. We managed to agree to reach the consensus among the Bitcoin exchanges in Poland. There were about 20 of them operating in Polish market, big online exchanges and also some smaller offices. And we agreed, although it was very difficult to let's say, negotiate with competitive partners, what should be the situation, what kind of regulation should be followed, and so on. So, for instance, when in July this year there will be new AML laws introduced in practice, we actually did it as a community by ourselves over a year ago. So all the cryptocurrency exchanges operating on Polish market, even if they're not registered in Poland, they follow the AML KYC procedures because they signed for that. And that was later on confirmed by the special certificate which was given by Vice Minister for Digital Affairs, showing that yes, this company agreed to introduce self-regulations. Later on the situation has complicated. The National Bank of Poland, the governor of the Bank of Poland, has called the Minister for Digital Affairs to close this group of advisors. They started intensifying the anti-crypto campaign. They spent a lot of money on paying the YouTubers for making films against cryptocurrencies at all. And that situation continues with some smaller changes until nowadays. However, before we had a very good cooperation with banks. You might not know, but where Bitfinex got the bank account. Not in later on when it was when they had the bank accounts closed in Hong Kong, and they opened the bank account in Poland. Poland was for the long time very friendly, crypto-friendly environment from the bank point of view, until the central bank and the regulator stepped in. And another slide, please. May I please the next slide? There is also one
minute left.
I'm waiting for somebody to click the slide.
No problem.
Yes, this is the report that we prepared. It is on the website, governmental website, so it's in English. So you can read it, you can adapt it. We know that the guys in Australia or in Gibraltar has read this document as well. The next slide, please. And this is the example of one of the certificates that we are giving to the companies that fulfill the self-regulatory requirements. The next slide, please. And here is a small description what is the situation nowadays in Poland. The situation during recent weeks has slightly improved because the Financial Regulatory Commission has established a new department, fintech department. So, and there is one person in charge of it who is quite clever and open to crypto and blockchain technology. But it will take a long time to reverse the situation that we had. All the cryptocurrency exchanges from Poland either moved out of Poland or were closed down.
Thank you, Krzysztof. You painted a wonderful canvas of a business use case of one country struggling with soul searching in Europe. It's a typical European situation. Do you have a bodyguard? No. So it's not dangerous to be in the crypto then in Poland. That's wonderful. What does the young entrepreneurs do in Poland when they want to do an ICO? Are they going to Lithuania? They go to New York, or what do they do? Because it seems to be as complicated as electing a Polish king to get sorted there. You know, we know the story about all the noblemen who had to give one vote and one person could do a veto.
Yeah. Most of Polish startups that want to do ICO do it on different jurisdictions. There are no brave people to do this in Poland. So Golomb is one of the first examples. They did ICO on Switzerland, then the others follow and go to Switzerland, Estonia, even Great Britain, Malta, Gibraltar.
Thank you, Krzysztof, because you are a very qualified observer of the Polish crypto blockchain landscape, and this certificate, I think, was very warming. I think it's time for you, who is a true VIP, an actor on the market, to intervene and give your views on this topic of self-regulation and regulation.
Miko and I started, it's called ICO Governance Foundation. So the way we try to go about this is we identify certain items, which are about 16 items, to ensure that people can choose themselves. What we try to bring about is we have folks like Blockchain Capital, Pantera, and others to join us. And we want them to push on their portfolio companies to adapt those qualities, such as for public companies, if you think about, I've taken a company public in New York back in 2001, 2006 in London Stock Exchange. We have to follow certain rules and regulations, such as disclosures, procedures, and things like that. We want the same transparencies to be done by those portfolio companies. For example, when you raise ICO, the issues that happen that you need vesting of certain items, vesting of shares, right? You don't want somebody to raise capital and run away, right? So we want somebody to hold those funds on behalf of the company. Fine, you can have 20% of the money giving to your, let's say, CEO or to management, but the rest should be held by somebody else. And they should be giving to the company based on specific milestones achieved, right? Or vesting of the shares. And again, budget based on the, let's say, use of proceeds, right? Or let's say shares. Normally when you raise capital, when you bring investors, venture capitalists, you typically, even your founder shares get vested over 4 years, right? With 1 year cliff. Why it shouldn't be something different? So that's the same thing. We try to push the same transparency. Eventually we want this large venture capitalists who finance, like Tim Draper and others, right? Boost to adapt to join us, and they push on their portfolio companies. Then providers like lawyers and then other like investment bankers to join, and they would basically never work with anybody else. And eventually, people, those companies who will become, they will get some tokens from us, basically a stamp of approval. So whenever they go through ICO, people will say, oh, they're basically stamp approval ICO Governance Foundation. Therefore, it's kind of like ICO, it's decentralized in some respect. So why are we doing this? So let's say Miko and I have been through 2001 crisis. We've seen that eventually grandparents end up putting their 401k money into this fiasco, and when the music stopped, who were the people who got screwed? Grandparents. So this is non-profit organization. We don't get money. We don't need this. We had many exits. We're doing this for that purpose. One of the main reasons. So, so you can look it up. It's ICOGovernanceFoundation.org. You can see the white paper. It's the white paper not for actually raising. We're not raising any ICOs. We're just actually, you can read the process there. You can see how we're doing it. You can duplicate it in your own countries.
Now, if you misbehave, would you see changes in the smart contract?
Potentially, yeah. And also, there's also another company that I support, Ryan from Missouri. You guys look it up. He used to run CoinDesk. He quit that company. He started a company called Missouri. They're doing kind of Edgar for our industry. You guys heard of Edgar, right? For SEC, they're doing the same thing for the compliance. Look at that company up. Very similar. So there are other very cool projects around. So, so that's I don't know. I'm happy to. Yeah, we actually have some projects that we're testing. We're doing some case studies. Yeah, there's some really interesting stuff going on. Yeah.
Thank you. We have 3 more people who want to intervene, but you have a question. What's just please tell your name, organization, if any.
I'm CEO of Roadblocks. My question is, do you think the shift should be for entrepreneurs to make the investors be on a vesting schedule, not the other way around? I think that's the sea change that we're going to see.
One more time, investors?
So the investors being on a vesting schedule rather than the entrepreneurs. That's the shift that I'm seeing.
I say both, if you ask me. I mean, If you look at the token allocations, as he was saying, 20% allocated to the founders and management. That's pretty good. You want to make sure that it's decentralized. If we talk about self-regulation, you guys are probably familiar with the show The Four that's out right now, American Idol, all these different shows where the crowd determines who wins, right? We wish that the voting system really worked like that, if the polls worked. But obviously, if the peer-to-peer market was to really work and be effective, that means that the peers should actually have a say-so. So with our organization, it's a nonprofit foundation, just like he stated with his ICO governance, Blockchain Exchange Commission. We're taking the guidance and protocols that the SEC uses, NFA and the CFTC, and bringing that to digital assets. If you guys are looking at recent news, they recently changed some of the laws in Dodd-Frank under Section 508, improving access to capital, which now makes it easy for crowdfunding companies, smaller OTC foundations, to go and actually raise funds from investors just about anywhere for just about any amount of money.
Good point. Thank you so much. We have one person on the panel who would like to talk a little about learning from other industries. And that's Csaba. And please intervene now. And I just wanted to say some good news. We already have people who want to join your foundation here. One of the best European lawyers in the audience, Thibault, right? Are you going to pay for that, or is it free? Yeah, so you got a new member. He's a cool guy. Csaba? Going to join, huh? It's a law firm. Yeah.
Yes. Could I have the slides, please?
Nope.
No? Okay, I can do it without slides.
No, just kidding. Of course.
Just a few, not as many. So basically, yeah.
You want to stand up here? So because
we can do that.
Okay, you have a body language,
I'll try to do that.
Come
okay.
here. This is the center.
I didn't know it's a workout.
Okay.
We'll try. Can we swap to the next one, please? So what I brought today is actually a little bit of a case study of how self-regulation is already working in other industries. So there you go, almost. So I'm sure you know all these guys here. What we are seeing today when we're talking about blockchain, digital assets, cryptocurrencies, that we see the traditional finance, the establishment facing up against crypto-anarchism. And I would like to point out that anarchy in that sense is actually not a bad word. So it means the lack of hierarchy. And I don't think it has a negative connotation. So one thing that already has happened where we have self-regulation already working and working fairly well is the airline industry. So if we're looking at that, we shouldn't look at self-regulation on its own. We have to recognize that self-regulation works hand in hand and basically complements the regulatory framework which is out there in multiple countries and jurisdictions. And yes, the US is taking a lead in aviation regulations as well, and some countries are adopting those frameworks. Right, so the question is, will we find a jurisdiction globally which takes the lead? May it be a US, may it be Switzerland, or Malta, for that example, who is really pushing ahead right now with certain frameworks and domiciling companies there. So there was one interesting remark which I have found to be very interesting. This one is from 1984, by the way. That's not try to attempt to unscramble the eggs when the US airline industry was being deregulated. But at the same time, yes, it was deregulated. There are still regulations in place which are brought at the government level. So we had the panel discussion yesterday in the main hall where regulation was the main topic, and self-regulation was a little bit touched on. Today we have self-regulation here, but actually I think it should be a panel where all these people are talking together. So if we can swap to the next slide, please. So this is coming from another industry, this quote. This was a study based on the chemical industry where they looked at self-regulation and how it affected participants. What the findings showed actually, and I cannot quote the sample size, but there is the source of the academic article if you want. Obviously, you can look it up. That there is always an opportunism, there is always pressures to counter the self-regulatory consensus, and there are always participants which are looking out for their self-interest. And what it does, it's some industries or potential standards can be in free fall or in nosedive. So that's what the picture is illustrating here. Right now, out there in the ICO world, and especially mid last year, late last year, we have seen this race to the bottom in terms of the quality of deals, in terms of commitments to the projects. So I fully agree with Michael in the sense that yes, there need to be standards placed, and those standards need to be somehow enforced. And today's topic with the panel discussion, the title is how do we enforce these standards? Are these sanctions? Could you just flip, please?
Or rewards.
Yeah, or rewards. So to the next slide, just there you go. So here are some of the principles that are coming out from other industry and researches, like how self-regulation should work. So these are some of the principles that other industries are using. And then you have the principle sanctions versus informal means. How do you actually try to self-regulate a vertical industry or niche? Coming back to the notion of rewards and sanctions. Sanctions are obviously something that affects a participant or a stakeholder negatively, whereas rewards potentially, and I think Michael, you pointed that out just now, there are certain stakeholders which can reward good behavior. So in a sense, yes, Pantera and all these venture capital firms are some of those stakeholders which can go and enforce some of these principles. There are some other stakeholders, and yes, and we have to align all the self-regulatory drive with these stakeholders to be able to figure out how they are positively enforcing self-regulatory principles. Because positive enforcement works always a lot better than negative, and there are numerous studies on that in organizational behavior and psychology, how you can actually motivate people with positive feedback more than with negative ones. So I'm really curious to see how that works here.
Thank you so much. I mean, this is the topic of your presentation was like, we shouldn't reinvent the wheel. And of course, there are many other industries. I'm thinking on the gaming industry, which by the way is about the same size as the blockchain industry before the free fall. It's about 500 billion with online and offline gaming, where they in the US took the view that every state should be able to govern and put in legislation. And of course, we have the same problem with addiction. We're afraid here in gaming of addiction, so that's forbidden in many states. And in Switzerland, there was a legislation just the last 2 weeks that you're not allowed to gamble on online gaming from Gibraltar. It was a voting, of a public voting in the country with 67%, and Vladimir Putin kicked out all the casinos in Moscow, you know, because you were there. And the same thing with the retail investors of ICOs. And I used to work 30, 40 years. Some people asked me to give some background of myself, which I will not do, but I can do it afterwards if you come up to me. But I used to work in telecom industry. People also worked in monopoly. In 1981, Michael Beasley wrote the telecom law that opened the whole competition, monopoly. So it's normal that the state institution and the regulators are resisting. When was voting for women allowed in US? I mean, the same thing. The suffragettes were on the street. The state's role is to defend and not to give away. So we have to fight for a proper regulation. Now we had academic view, we had a philosophical view also. Now we move to the money side here. These two gentlemen represent the money side. And I would like to start with John, who runs a prominent law firm. And he represents the people, the money people. Huh? Old or new money? Combination. So he's going to talk about hedge funds, VCs, and what they're doing, and investing in crypto funds, which is a wonderful international experience that you will share with us. Do you have slides? Good.
I didn't prepare slides because I didn't want to bore you. When you see lawyer slides, you're done. It's bad enough that there's a lawyer.
Stand up there because it gives more context.
Okay, great. Well, let me start just by asking, in the room here, who is interested in the ICO perspective? Okay, and that's exactly what I expected. Who is interested in the investing perspective? Okay, everyone who is interested in the ICO perspective is also likely interested in advancing the availability of capital raising. And so when it comes to raising capital for any venture, be it an ICO, be it a fund, the nature of the investor is paramount. And I often hear complaints about over-regulations or premature regulation, or somehow that the regulators are the problem. I would posit that in this field, from our perspective, and that is the hedge fund manager's perspective, one of the biggest challenges is capital raisers misidentifying the investor. In an early stage investment opportunity, you generally want to go to a capital source that can afford to lose their investment. And with the SEC, for example, they have a whole separate set of rules for highly accredited, qualified investors. And there are different standards. There's the accredited investor, which is really the baseline. That's a $1 million net worth or 200,000, 300 with a spouse net worth. If they're what's known as a qualified client, that's a $2.1 million net worth. There's a similar standard for commodities, and then it goes from there to qualified purchaser, which is 5 million, and in certain cases 25 million and above. With these type of investors, the SEC, the CFTC, and international regulators are willing to experiment. They're willing to let the market determine what these usually very well represented groups are willing to invest in. If their lawyer gives them the thumbs up, then go for it. The problem with some of the retail level investments is it scares the industry as a whole. It scares the SEC as a whole. So from my perspective, we've just decided as a law firm to stay out completely of the ICO space. I think the law firms that do represent ICOs, we always give extreme caution to use only the very highest pedigree legal counsel. A lot of times those are those that have the most to lose and are going to be much more careful about capital raising. My background was with Akin Gump, a large international law firm in New York and Moscow. And then in 2010, we started our own fund-focused law firm to represent hedge funds and venture capital funds. And we recently gave a presentation in May in London and Dubai, and we're regularly presenting at East Coast schools. We'll be at Columbia this next in a couple of weeks, and at Harvard. And I'm one of the advisors on the Harvard Law School blockchain initiative and involved with their publication. What I see the need for in regulation is a strong tilt towards satisfying these higher net worth players. And in one of those areas, the issue of custody. And this is where innovators like yourself are extremely important. Right now, there's only really one group that can significantly invest large capital in cryptocurrency funds, and that is venture capital. Hedge funds, which are a lot of my clients, we're pushed up against a $150 million limit. We cannot go higher than $150 million because the SEC requires compliance with what's known as the custody rule. And the problem with the custody rule is it's very difficult for high-frequency traders to get custody. And if you're interested, on June 28th at Columbia University, we're bringing together the biggest custody providers. We've got Ledger Capital, BitGo, Kingdom Trust, Dominion, and a group out of Dubai, Regal Assets. So I guess I would say we are interested in finding solutions to that, and I would say especially in the academic side, to the extent that that can be promulgated, that will open a lot of doors for additional investments.
Thank you. I have a quick question to you. How many funds are there, fund of funds or crypto funds? I heard a couple of hundred. Do you have any figures on that?
So the number that is quoted in the media most often is 250.
Right.
But that was back in April. Well, I know that it's it's much more than that.
And what kind of capital do they have?
I would imagine we're closer to the 500 side is my guess.
Right.
But yeah, under generally you're sub 50 million, sub 150 million, unless you're talking about private equity, and they can be larger.
Great. So now we know about that. And any questions to John? I mean, actually, normally he charges per hour, a leg and an arm. So this is a good opportunity. Usually. You don't? No? Okay, that's good. Okay. Go ahead.
Hi, Karl Donegan, Stasis Gaming. Just wondering, in regards to the ICO space, sticking away from it, is that purely if there's a public raise involved, or is it if there's just a private-only raise, would that still be something that would be permissible through your clients?
Yeah, so from my perspective, I guess I wouldn't speak to the overall ICO regulatory structure. There are lawyers that are better at that are raising it. Our clients will invest in ICOs to the extent that they feel comfortable with their risk profile, including their regulatory side.
Half of the audience were interested in ICO, so Reginald here should give us some enlightenment as far as regulation, and we want from you a silver bullet, okay? So it should be, what needs to be done, all right? That's it.
Excellent. Okay. So
and you have, normally for your speaking, I heard in the industry that you like minimum 20 minutes. Can you do it?
And 20,000.
Okay, and 20,000. No, but do it we'll wrap up here.
Yeah,
5 minutes.
So speaking on, the governance side, if you look at, he was speaking on custody. I'm sure you guys recently seen what happened in the turn of this year with Bitfinex and Tether. With the fiduciary risk that were involved, we've seen that there was manipulation in terms of the buying of Tether and the price dips in Bitcoin, some manipulation in the market. Obviously, when you see centralization in this market space, there can be issues. We have proof of concepts now. You guys are familiar with eBay, right? But they have the rating system. You get stars if you do well. You don't do well, they give you less stars. Who here is familiar with local Bitcoins? We need them, A lot of times, they're the only option. But the ratings are there based on people that have shown to do business, right? So we have a self-regulatory proof of concept laid out. I spoke a little earlier on the four. American Idol didn't get to make that show. But Yelp. Right? All of these different things give us an option to be able to give, you as peers a voice to be able to say what works and what doesn't, So obviously, if you think about the way smart contracts works and they're mutable, you can go in and have somebody be dismembered or disbarred according to what's put into the protocol and them following governance or not following governance. I think regulation is huge, mainly for the ICO developers and providers to be held accountable. Any ICO is going to start out centralized. Our ICO currently right now, we're in our whitelist. We're taking on exclusive investors. We recently got our Reg A, which allows us to take investments from anyone, but we still need to be held accountable. Until it gets decentralized, much like Ethereum is and a lot of these other platforms, the ones that are actually looking at the order book and have access to the liquidity need to be held accountable. Fortunate for me, being an investment banker in the hedge fund space, I'm a market maker, and our exchange, it's going to need a market maker. We've also developed partnerships with companies like Acuna Capital, B2C2, and hopefully me and Michael can talk after this. Bitfury is a big company, but you need liquidity. A lot of these companies, these ICOs, they don't have the liquidity. They tend to go in, market, go to these exchanges, and you'll see they're stagnant on the exchanges. There's nothing in the order book. So obviously being able to make sure that you regulate the people that are coming in, bringing these coins out, whether they're called securities, utilities, or coins, it doesn't really too much matter. If you're expecting a return on your investment, then the people that are bringing out these securities, tokens, or whatever need to be held accountable. Was that good timing? Should I keep going?
Reginald, I think the audience wants to ask you a question, but in the meantime, I have a question. What is the self-awareness of the regulatory roadblocks when ICOs comes banging on your and David Drake's door? you know, what are their awareness? Do they underestimate the regulatory risk, or
Well,
do they?
going back to, what is your name, John? John was saying
yeah.
the SEC, a lot of these regulators, they're trying to take a step back to kind of just see, you know, what the space, as far as us as the participants, want. You know, they recently changed, as I said earlier, Dodd-Frank, to where now you can go in and you can raise funds from just about anyone, anywhere, and the ICO route is not the only end-all, be-all. You can go to the OTCQB pink sheets and raise funds there, you know, so.
By the way, I saw in Alcatraz, they actually had their own coin already many years ago, so they were, you know, prototyping.
Yeah, they were public. Yeah, actually,
Yeah, exactly.
we're looking to partner with Naga. Drake is on the board of Naga Coin. They recently just were, I believe, listed with Bitforex.
Exactly.
Yeah, yeah.
So I'd like to thank you very much. A small little applaud there, because you moved around also, which is great. That's the way to do it. And is there anyone on the panel who would like to jump in here and make a comment? We're sort of zooming in here. We got 5 minutes left. Huh? Or otherwise, I'll invite you from the audience. You know, ask questions, please. Is there anyone? Yeah, go ahead. So please just say your name. Can I? No. So, who you are and what you want.
Hey, what's up? My name is Pedro Rivera. I'm the CEO of Liquex. We're a startup exchange. We have an educational platform that's built to basically teach people about crypto and give them a space to operate that information with. I have a question for you guys. Anybody have an understanding for how the regulators will look at airdrops as opposed to ICOs as a fundraising mechanism?
Good question.
Well, with an airdrop, you're not taking on an investment, you know, from, you know, the participants. Right now, if you look, they got Reg D, they got SAFT, Reg A, Reg S. Obviously, if I'm taking on money from an investor, I'm held accountable. If I'm giving you a token, it's much like you playing on my video game, and you use these as rewards to be able to operate on the platform. So if I'm not taking your money, these regulators can care less.
Yeah, go ahead.
To that, I was actually recently interviewed by Wired magazine with the same exact question, and the one concern I have, though, is that often for these airdrops, they're going to require that you're already holding a token, and so being a cautious issuer, they should realize that by having a inducement that is predicated on a requirement of an exchange of value, that is part of the security, and so that doesn't make them home free. Now, if you're out of the blocks trying to just raise awareness, it's value, it's not money, and there's some nuance there.
Excellent. Is there anyone who's in ICO space now? For example, you, Natalia, you're in, Natalie. What's your question?
Well, no, I don't have questions yet. I'm just researching this part.
Okay, so that's good. Anyone here who, okay, well, again, cool.
So I'll stand up for this one. So
Yeah,
we're
good,
actually
cool.
doing a security token and a utility token. So to your point, if you're doing a security token, yes, you have to follow the SEC rules, right? You know, Reg A, you know, Reg S, Reg D, and yeah, you got to wait the 3 to 4 months for the Reg A. But if you do a Reg D, you know, you can list right away. You have to, of course, within 15 days, publish with the SEC. But you know, it's a great way to get started.
But it's not liquid.
You do have to wait a year, but that's way better than waiting the 10 years that most VCs
If I'm an
have to wait.
investor and you tell me I have to wait for a year, I'd rather hold a U.S. bond or a bar of gold.
So a bond won't go up as much as an ICO, like 500x, but you can totally do that. For utility tokens, if you're familiar with like Indiegogo and Kickstarter, the SEC does not regulate Indiegogo and Kickstarter, right? So if you actually have a model.
Yet.
No, they don't. When did you see that?
No, if you raise, let's say if you raise for a medical device company, they do.
So, I mean, that would be the...
So I raised for a previous company,
the FDA.
they came back, FDA, that's correct.
Yes, not the SEC.
Not SEC, you're
Yes,
correct,
thank you.
FDA.
Well,
Next time we have you on the panel.
Let me add to that. I'll make it
Go
quick.
ahead.
You guys probably have heard of recently the JCO, the Jobs Crypto Offering. It's Reg D, where you register Reg D, but now you can go in and you can do Reg A without having to get the approval from the SEC. As long as you report after the fact, you're fine. Public companies that have missed the filing deadlines can take advantage as well, as long as they're under 75 million. So go get your Reg A.
So you have to wait 3 to 4 months before...
No.
You have to publish with the SEC before...
Are you a lawyer?
Before Reg A.
You should come sit on this panel. But no, with Reg D.
So, we have a lady who has asking a question for once. That's great in this macho crypto world.
So, hi everyone, my name's Myra. This is actually very interesting. So I actually work for Indiegogo and I'm helping to launch their ICO platform. We do have a broker-dealer, I'm happy, thanks.
Thank you.
I'm happy to talk more offline. I know we're getting sort of close to time. I'm also having to talk on the future of security tokens on Wednesday. So my question was just more of a comment, just in case anybody wanted to go offline with us. Happy to chat. Yeah, sorry, thanks.
No problem. Thank you for the question. Any more questions? Okay.
This one's closer.
You don't have a bomb in there, do you?
Yeah. Kyle,
Okay.
Stasis Gaming again. The reason I asked, I have a two-part question. One, which was the airdrop. Like, we're doing a universal game rewards platform, and you said with the airdrop thing, it's regards to someone they have to hold a token already. But the IC gaming is like a place for mass adoption or an easy way for people to get into it. And if our airdrop token is one that's sort of encouraging people to just use the platform as opposed to trade, because as you know, with our, like, what we're trying to do is not encourage trading, it's just for that. So is the airdrop going to be perceived as like an inducement to learn to trade? And then the other question that I had, I didn't get your name, sorry, but
Reginald.
Nice to meet you, Reggie. I'm Kyle. Oh, look at that.
Take a photo there.
Was in regards to the liquidity and market makers, one of the things I find strange is that it's acceptable almost for some tokens to run bots to increase their volume on exchanges, and you can see it happening, and you can just see it, and we all know it's happening, and I find it really strange that that's just an accepted practice. I was just wondering what your thoughts are.
On that score, I'm, well, okay, but, we should close now, and we should have coffee, and I'm sad, but it will have to be next time, or, you have to talk to the other people. A big applause to Michael, to Krzysztof, to Csaba, to Reginald, and to John for coming here today, and thank you, all right? It was a good session. Thank you so much.